Volume is one of the most underrated tools in trading, yet it's incredibly powerful. By understanding volume, you can get a clearer picture of market momentum, find great entries, and even avoid bad trades. Today, I'll show you how volume works, how to use it effectively, and how it can give you an edge in the market. At its core, volume measures the total number of transactions happening for an asset during a given period. For stocks, volume represents the number of shares being traded, and for futures, it's contracts. It tells you how much activity is going on in the market and gives you a window into the strength of price movements. Here's why this is important. When volume increases during a trend, it confirms that the trend has strong support from traders and institutions. For example, in an uptrend, high volume on bullish candles means buyers are fully in control, pushing the price higher. The same logic applies in a downtrend, where high volume on bearish candles signals strong selling pressure. Conversely, low volume during a trend or right before a breakout can be a warning sign. It suggests hesitation among market participants and often indicates that the trend is losing steam or that the breakout might not hold. It's important to compare current volume to its recent averages. For instance, if the average volume of a stock is 1 million shares per day, but today it's already at 2 million before lunchtime, something significant is happening. Now let's get into how volume can help you time your trades. One of the most reliable ways to use volume is for confirming breakouts and retests. For example, if price breaks above a resistance level and you see a sharp spike in volume, that's a strong signal that the breakout is real and backed by significant buying interest. Without that volume spike, the breakout could easily fall and trap you in a bad trade. The same goes for retests. Let's say price pulls back to a key support level after an uptrend. If you notice a volume spike as price bounces off that level, that could be a sign that buyers are stepping back in and defending the support zone. That's a strong entry signal. Another entry technique involves combining volume with candlestick patterns. For example, a bullish engulfing candle with a volume spike carries far more weight than one with low volume. This added confirmation can give you more confidence in your trade setups. Just like volume can help you find great trades, it can also help you avoid bad ones. One of the biggest red flags is a breakout with low volume. If price moves above resistance but volume stays flat, it's a clear sign the move isn't supported by market participants. These kinds of breakouts are often fakeouts, where price quickly reverses and traps traders. Another thing to watch for is declining volume during a trend. If you're looking to enter a long trade but the uptrend has been losing volume over time, it could mean that the buyers are running out of steam. In these cases, it's better to wait for a volume spike to confirm renewed momentum before entering. And don't forget about consolidation. Markets often move sideways with low volume before a major move. If you're trying to trade within these low volume ranges, you're more likely to get chopped up. Instead, wait for a breakout accompanied by high volume for a clearer signal. Before we wrap up, here's a few tips to keep in mind while using volume analysis. First is to always compare volume to the context of what's happening to an asset's fundamentals. A volume spike during a news event might mean something entirely different than a spike during regular trading hours. Watch how volume acts after the initial spike during news and apply that context to the volume that showed up during the news candle itself. My next tip is that volume works best when paired with other tools like trend lines, support and resistance, or moving averages. It's not a standalone indicator, it's a confirmation tool. And lastly, remember that practice makes progress. Volume analysis is a skill. The more you observe volume patterns on the chart, the better you'll get at identifying high-quality setups and spotting red flags. Volume can be a great tool for any trader. It helps you understand momentum, find strong entries, and avoid bad trades. The key is to always look for volume confirmation, whether you're trading breakouts, retests, or even reversals. Don't forget to like and subscribe and comment below with your favorite way to use volume in trading.